Good morning, friends. Welcome to the SBI Securities morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that could be in focus for the day as well as for the next few sessions. Now, coming to the price action perspective, both the frontline indices Nifty and Bank Nifty opened flat and traded in a narrow range for the entire session, with Nifty trading sideways in less than 60 points range, while Bank Nifty spending most of its day in a 130-point range. Coming to the global macroeconomic indicators, if we have a look at the dollar index and the US 10-year treasury bond yields, both are stable around 103, 104 levels as well as 4.3% respectively. So this is a big positive from the global equity market perspective and towards the continuation of the liquidity flow towards the risk on assets. If we see the Brent crude oil prices, this particular variable also is trading weak and it's currently quoting around 75 $76, which is a big positive for an oil import dependent economy such as India. And the current trend in Brent crude suggests that it could further dip towards $72, $70 per barrel. So all these global factors are lining up in favor of the Indian equity markets and the texture remains buy on dips. Also having a look at the global equity markets such as S&P 500, now this index also has given a big breakout on the upside above 4600 levels after consolidating for at least 10 to 12 sessions in the last 2 weeks, and we feel that this is heading towards 4710, 4740 on the upside. Now, all attention will be focused on the upcoming monetary policy announcement by the US Fed on the 13th of this month, that is tomorrow night, the impact of which will come in the Indian markets on Thursday morning. Coming to Nifty levels, yesterday we saw Nifty ending the day with marginal gains of 0.13%. However, over the past 1 week, the advanced decline ratio has declined from 90% from its peak level to 46%. So what we feel is that this implies that fewer stocks have participated in the last few days rally, and thus this could be a sign of caution on the long side and not necessarily a shorting signal. Also, if you look at the 14-day RSI, which is quoting around 83, 84 levels, now this is indicating the overbought nature of the index, which implies that the indices as well as the stocks could consolidate in the coming few sessions. And even if the index consolidates, what could happen is that there could be a lot of stock specific sector rotation within the index. Going forward, 20,900, 20,930 levels is expected to act as a support. Until this zone holds, index could extend its rally up to the 161.8% Fibonacci extension zone of 21,070, 21,100 levels, derived from the Fibonacci sequence applied to the moves seen from 15th September to 26th October 2023. On the downside, for the day below the levels of 20,900, index could retest its support levels placed around 20,800, 20,830 zone. But if you look at the overall structure of the indices of the last few sessions, positionally I feel that 20,750 zone could act as an important positional support, and till the time this level is not broken, we should not even think of going short from a positional perspective. Also, looking at the options data, significant call writing buildup is witnessed in 21,000 and 21,050 strikes, while on the puts front, 21,000, 20,950 as well as 20,900 strikes has witnessed considerable open interest additions. So, overall range for the day could be 20,900 on the downside and 21,100 on the upside. Now coming to Bank Nifty, what we've seen yesterday is that again this particular index also has traded in a tight range of 130, 150 points for the entire session, and we feel that the immediate support for Bank Nifty now is likely to be in the zone of 47,100, 47,150, while the immediate resistance is placed around 47,450, 47,490 zone. On the downside, if 47,100 breaks, then index can retest its next supports which are placed around 46,900, 46,830 zone, while on the upside, if 47,500 is taken out, then the short covering move or the fresh long build-up could be visible up to 47,800, 48,000 on the upside. For the weekly expiry, significant open interest build-up is visible in 47,300, 47,200 as well as 47,000 puts, while 47,300 and 47,500 calls have a lot of build-up visible in them. which implies a near-term broader range of 46,900 and 47,500 for the banking index. Now, coming to stocks and sectors in momentum, Nifty Media was the best performing sector yesterday as it ended 1.2% up for the day with strong momentum visible in Z Limited, Hathway, as well as Dish TV. Metal stocks were shining yesterday with the likes of Jindal Steel, JSW Steel, and SAIL witnessing strong outperformance in the past few sessions, and this could further strengthen from here on too. Strong momentum was visible in railway stocks also, and we expect stocks like RVNL, RITES, and IRFC to outperform going ahead in the forthcoming sessions. Also, from the broader markets, bullish setups were observed in Ultratech Cement, TCS, Polycap, Cummins, Dixon, Power Grid, Bajaj Auto, Nestle, ICICI Bank, Union Bank, Coromandel, PNB, uh, RBL Bank, and a lot of other stocks. So overall, what we feel is that even if the index consolidates, stabilizes here, a lot of stock-specific action could still be visible. Coming to FII DII data, in the cash segment, we've seen FIIs buying to the tune of 1260 crores, while DIIs sold to the tune of 1000 crores. FII's long short ratio for index futures remains steady at 56-57% as they squared off almost 2900 contracts of index futures longs. On the stock futures front, FIIs have bought closer to 1732 contracts, while on the options front, FIIs have squared off or sold 82,000 call option contracts, and they've even sold 32,000 put option contracts. So, selling both calls and puts indicates that the markets could still consolidate from here on for the next few sessions. So, friends, that's all for today. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.